Good afternoon this Tuesday, July 1st. Well, here we are halfway done through 2025. Everybody's all disappointed that we're going to grow a big, beautiful crop, but nobody's happy with the prices. Well, let's remember something. Price is not supply equals price. It's supply plus demand equals price. And what's not being talked about right now is the large building buying base that's coming for the corn market and our soybean market, courtesy of not necessarily a trade deals, even though we will take them, not necessarily a Chinese trade deal, which we gladly will take that if we can get it done here later in the year, but it's the dying of the US dollar. Have you been paying attention? Here's the US dollar daily continuation chart, and since the first of the year, it's on a downward trajectory. It almost looks like the corn market falling out of bed, but it's not catching any legs yet for now because everybody's holding their cards back talking the trade deals. But they won't ignore this for long, as here's the weekly chart. We've been showing you this in the newsletter. We finally, scalped it, bounced above it, and dying underneath it. And the big, beautiful tax bill is not helping us. And also President Trump rightfully wants Powell out of the head of the Fed because that man has been horrible. When anybody on the street knew inflation was a problem in 2022, and it was not a transitory event like he was talking about, it was a flush of government money that was creating this inflation. And so he was always late raising rates, and now he's late lowering rates, except for unless if you're a Democrat running for a re-election as a president. No, he'll do an emergency 50 basis point cut right ahead of the elections to try to make things look good. But nonetheless, the dollar continues to break. But here's what I really want you to see is look at the monthly chart. When we can break it out, and then I'll zoom out here even farther in a little bit. This is breaking down. And as far as the charts are concerned, you get an ABC break. It at least measures us down to mid-90s, meaning putting us right in the middle of all this fun time where our exports were good. But let me zoom out even more. This is when our exports were really good. Back in 2003 through 2013 or 14, this year, of course, 2008 was the dollar exploded during the concerns of our crisis with the housing, and then it backed off. Then we had another concern later on in 2010, but still hovered low. This is great exports. These are good exports. Up here is bad exports. Well, we're leaving this category, and if we can just get Vietnam to sign a trade deal, get India signing a trade deal, take our GMO corn for ethanol production. They won't use it for food, that's fine. We need them to help offset because Mexico is getting rains. Mexico, for their crop for going into next year, where the numbers are, they probably won't be as big of a buyer of corn next year just because they're growing some, but we need India in the mix. And this US dollar falling down into here gives us an opportunity to compete. It works. But if we really head to the low side of this range, this does help us out. And of course, the dollar always is known for once it gets a trek going, it'll stay that way until October, November. I've showed this in past videos last year. And so the dollar, it's breaking down at least to midpoint here is the target. And you tie this together with just this trade deal talking, this tariff talking, get this stuff out of the way. We've got something that can really move here for our grain trade. And let's bring into account the Brazilian real. Remember how last year they were telling us the Brazilian real, it's so weak, it's going to take the price of beans down, blah, blah, blah. Yeah, well, it did. It drove the price down. Ooh, I'm missing my bar chart, the dates down here. I'm sorry. The dates would have said this was the end of December. That's when beans bottomed. Here's the Brazilian real going up, 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 up. And what are the beans doing? Surprising everybody. Soybeans don't want to go down. Soybeans keep holding up, and that's because of the situation where they're having troubles actually getting the farmers to release it. If you would like more information like this, including our morning text alerts, our afternoon updates, and especially our trade alerts during the day, scan the QR code and subscribe to our newsletter to get a 30-day free trial along with the text alerts, or just go to our website and hit the link at heartlandinvest.com. Witness this tweet here. You can go ahead and follow this guy, Eduardo. He's pretty fun on Twitter. Here's the basis. Here's the basis for U.S. corn, out of the Gulf. Here it shows our basis. We're cheaper than what Argentina is doing, much cheaper than Brazil, and the exports are slow. We actually could likely see our exports for corn, which should go to zero right now, are not going to zero. We're continuing to see exports take place. And another point I want you to see Is the Brazilian real zoomed out? I showed you this break into December of last year. Well, as you can see, the recovery, it continues to move higher into levels that allow for our bean trade to also continue to be aggressively exported. So bring it on, China. We want you. But things are improving. This price that we're experiencing for corn and beans, it's about to shift on us, especially when you look into Eastern Europe. There is the Baltics, Ukraine. This is Ukraine. Their corn crop is getting stressed for their pollination. Up in France, Germany, their corn crop getting stressed. Nobody wants to talk about this stuff, how they'll probably buy more. They will be competing with the Baltics, exporting less corn. We're going to have probably one of the most monstrous fall export paces. And of course, the USDA has that dialed in on our current new crop, and a lot of people say it should be dialed out. I think not only does it stay dialed in by the USDA, it could be even better. So here comes corn today collapsing. We have been showing for the continuation, $4 is a magical number. It's a 786 retracement of last year's low. And I said it's probably going to bounce off of $4. Went to $4.25, bounced a nickel right into the close. We'll see how we go out through the 4th of July. Now, it can still break lower in here a little bit. But the point is, we still, contrary to some out there, this was a major low. This is wave one. We are in a nasty wave two, wants to complete itself, maybe a little deeper yet. It can if it wants, but we strongly suggest the currency is going to turn this market and take us higher. December corn still could, if it does match legs down, could go to 208 to 210. You know, today was 216. You know, maybe it will, maybe it won't, but it's just saying that it has that ability to go there. But I think this downward push that it has, it's losing its steam because nobody wants to sell into it. You got the revenue insurance that's going to kick in here. You're already into the indemnity numbers. Nobody's willing to want to sell. So it's just the blind, you're following the blind right now, moving it lower. They're eating themselves. And to push it lower takes more index fund selling, hoping somebody's going to bail them out. When they come to buy, they need a seller. So we'll see here. That's to be witnessed here in the next month. Beans doing the wave A bottom we talked about. Everything's ABC, 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 as we have shown you in the past, where we did these counts. And now we've done an A down. And of course, this can subdivide A, B, C. These are never to scale for time, okay? It just spreads it out so you can see it. But now we're probably doing an A, B, C, B up. And then we'll do a C down. What'll be interesting is this C down, if we get our B wave rally, I think is going to go to about 1050, 62% retracement, get some kind of like an ABC thing up there. Maybe it stops just above 50%, but that's the thing with Fibonacci's. Where is it likely? First bounce, 38%. They always say a market will bounce 38%. It did pull back. Next stop, I think, is 62%, 1050. Then we do a wave C pullback. Now, the important point. You can have C wave failures. If this C wave comes down and fails to punch new lows below 1010, 1014, the current low is 1013 and a quarter, then that tells you there's more strength behind it. And maybe it's tied to the dollar. Maybe it's tied to that Brazilian bean thing where their prices are high. You know, it's hard to move. And then we could see something, and I'm going to blow this out a little bit, that this big C was not done yet. I've been talking about $11 plus beans, 11.20 was the measurement. We hold all of this. This false breakout that occurred is just getting re-challenged, and we still have the prospects of this thing going A, B, failed C, and then a large C rally to 1120, 1140, and that could be out in the August window. Whether I've got it mashed for time, we don't know. I'm just saying that's how waves will try to play themselves out. Wheat today, interesting. This is December Chicago wheat. Okay, so the breakout, everything failed. Came back down, you got your left shoulder, your head, your right shoulder. It did not close below this price. Yes, it traded below it, but it never closed below it, held it. More importantly, even the 786 came in right there from this low to this high. The 786 held. I actually contemplating throwing out a spec trade, rebuying this December wheat this morning at 566. Didn't do it. I'll probably kick myself tomorrow. Should get a push back up in here to the moving average resistance at 578 here, 580. And of course, pushing through that will be key, but if it hits it, bounces off, you buy it, and maybe we still get this push up. Because when you look at Kansas City wheat as well, Kansas never took out its prior lows here. All the lows have held. May 13th still is the important low. Creating head, a left shoulder, head, right shoulder. And if we turn up in here and start breaking this moving average at 642 on Kansas City wheat, spot September, that December Chicago I showed you, well, seasonal lows could be in. We typically peak May 15th and we break into July 15th. Well, we made a low on May 13th, so things are out of whack. And typically the wheat market has a bottom by the time we get to mid-July as the harvest works north of Hutchinson, Kansas. Well, they ain't too long off. Moving fast, these big 9-number John Deere combines and New Hollands and Internationals, how they eat up a section in a record time. The harvest is moving, and the rains are finally stopping down there to wrap up this crop, which low proteins and the bushels seem to be there, but the protein is low. Cattle, conversation today. Well, we know what happened. The USDA is opening the border starting July 7th. They start, I believe, in New Mexico, then it goes to Arizona the next week, and the week after that is Texas. And then in August, there's several points opening up. And then by September, mid-September, everything should be fully open. And so initially the pressure could be, this could be our B wave high. We had our wave A low, and we start working our wave C decline, which could carry us. We've been waiting for at least the 205, 204 range, but could go as deep as the 200 range and re-challenge this, always in a panic, this trend line on the continuation chart. The live cattle chart on feeder cattle, we have, could be a B wave high, was achieved yesterday. I talked about that the 78% retracement would be 311. It got there, by golly. And then of course, we've turned lower. Now the deferred contracts closed lower than the opening. The August contract closed where it opened. Gives us an interesting chart on a candlestick. Lower tomorrow heads us to the trend line at 303. Keep in mind that from last week, we kept pounding on the $300 mark. And in 2 days, we were at the 786 retracement. Classic B, short for what I always say is biatch. And then C is for crash. Now, everybody wants to talk about how, yeah, but the feeder index, it was up $1 today to 310. Well, 314, excuse me. Well, that's the feeder index. That's today. August feeder cattle. All that matters is where they're at the last 3 days of August to settle up the feeder index. So it has no bearing on where the feeder index is today. Its job is to anticipate the future. Well, by the end of August, we're going to probably be up to 50,000 head out of Mexico a month or more based off the release schedule, how this is going to happen. So it's already pricing in, taking the pinch off the garden hose of trying to find feeder cattle, so it's more of a flow of them, and by the time we get into October, we could be crowding 70 to 80,000, because that's where we were after we reopened the border this year. By mid-May, we were already 70-some thousand a month on score for, but of course it got shut off. So C wave here, quickly challenge tomorrow's trend line 303, likely re-challenging 300. I think the big target here I have been waiting on is 295 to 292. That's this moving average here. You know, the C is not meant for timing. It's just that we're in wave C. So we could be this B, we move this over to here, and we could be in a wave C that probably by mid-July, and don't forget we have the July 31st USDA semi-annual cattle inventory report. You've got Tyson saying they believe heifer retention is up maybe as much as 4%, maybe it's not. JBS is out saying retention is up, they can tell it in the kill. You got Goldman Sachs already predicting heifer retention is up. So if they smell it in the 31st report, well, then where do you think we could be probably at the early part of August? This is just piecing the puzzle together. We're being Lewis and Clark here, mapping out the territory that's ever been covered. C wave could easily be down after it breaks through this major support zone that you can see here. Then the next stop is the breakout of wave 3, which is 290. Then, of course, depending on the timing, you've got this long-term trend line. If I'd have zoomed out, you'd have seen how important it is. This would be the worst of the wreck. I'd expect would be the mid-280s, like 84 to 86, if it really became a wreck. But for now, this is the support zones that are challenged. 303, then it's on to 292 to 295, then it's on to 290, and then, of course, we'll wait for this in time. But I think once we get past that inventory report on July 31st, that's when things could be interesting and really challenging major support. This is Eugene Grainer with Heartland Investor Capital Management. Hope we find this information useful.